Hi, everyone. This is Rob Roy, and welcome to the Elliott Wave Options U.S. Market Update. As we do each and every week, we show you the stocks on your screen that'll be featured in this recording. And as a reminder, if there's a particular stock you're interested in, you can go directly to it using the chapters feature in this recording. All right, let's take a look at the markets. And before we go too far into it, just want to let you know we are recording this midday on Friday, so the prices could change a little bit into the close. But you can see that we have recovered from the, quote, tariff tantrum that the markets had. Kind of was mind-boggling to me the way the futures reacted Sunday night and into Monday morning on the fact that the tariffs were enacted, and then Mexico and Canada were going to retaliate. It's like, did the market not pay attention to what President Trump was saying? He's been talking about this for months, so I don't know why that seemed to be some sort of a news shocker on Sunday night. But we opened lower, and then it came out that, okay, we're going to pause on the tariffs for 30 days as there was negotiations and agreements made between the U.S., Mexico, and China. Canada, not so much on China yet. We'll talk about that another time. President Trump, like him or loathe him, he's a deal maker. He's a negotiator. That's what he wants to do. And he uses the leverage that he can. And that's all this was. And he's been talking about it. So why we moved down like this was hard to understand. But a clear signal, I think, is if we go to the VIX and take a look at that, you can see that, yeah, we did get a little bit of a spike on that, but nothing significant. We didn't even make it to 22.5 on the news. And so maybe that was a telling sign that, yeah, it looked pretty ugly Monday morning on the open, but without the VIX making one of these crazy big spikes, it was telling you that this is probably going to be a short-lived event. So as we go back to the S&P and look at where we are today, you can see that we opened higher, but now we're trading right back down to the 10-day moving average. That's where we are at this moment. So it'll be interesting to see where we close and if we can hold that 10-day moving average. We did have some economic news that came out today. We had the non-farm payrolls report, which showed decent numbers. Unemployment dropped a little bit. The market, I had mentioned this last night in our insiders meeting. That's for alert subscribers at evotrader.com. We have a complete webinar and Q&A just for them. And I mentioned that I thought that the non-farm payrolls report was going to be a bit of a yawner. And it was. Not much happened in the futures. But then at 10 o'clock, we got the consumer sentiment numbers that came out. Now, that was different. Consumer sentiment was down significantly. And why is that important? Because the consumer needs to spend, right? We're a consumer spending-driven economy. So if the consumer is concerned and they're not going to spend as much, then that changes things and puts the market down a little bit. And then the anticipation number within the consumer sentiment report for more inflation was much higher. So the consumer is concerned about inflation coming back. And so that's why we moved from opening and trading a bit higher earlier to coming down. It wasn't the non-farm payrolls report. It was the consumer sentiment report that changed things. So where we sit right now is we're waiting to see if we can break above 610. We have this big trading range here. So it's a little bit of a, let's let the market tell us where to go from here. If we break above 610, then I think that wave 5 continues. It's barely a wave 5 because we just barely took out that wave 3 from back in December. But if we can break above 610, then we start looking at this wave 5 continuation into the tap box between 620 and 670. About 645 is the midpoint. But we got to get above 610 first. First things first. So if we can break above that, great. Now, there is still a potential that could act as further resistance, and then we move down. But to really go short this market, and I know that looks like a long move, but to really feel comfortable going short the market and not the buy the dip mentality, we would need to break this wave 4 low. Then that renders this disqualified. And then we start looking at what normally happens in Elliott wave rules is that you retrace the entire impulse move. So if we were to break 575, well, then we're looking at coming all the way back down here into the 530 area or so. That would be a great time to put on a whole bunch of short trades. But it's you're guessing or speculating at this point if you do that. So far, we're holding in here pretty well underneath the 610 level. And we'll look to see if we can break above that. So we did the VIX already. Let's go ahead and look at some of the rest of the U.S. markets. We'll go to the Dow. A lot of these charts are going to look similar here with the tariff tantrum and then the recovery that's ensued since then. It doesn't seem like the Federal Reserve is going to do much. I'll get to the bond market here in a minute because I think that's pretty telling as well. But you can see that we're bumping our heads consistently against this resistance level at 450 on the Dow. If we can break above that, then we could have a further extended. Notice the wave 5 on the Dow is at 125%. We're only at 50% on the S&P. So even with this corrective move, something that started last year, was money moving in on this big move up in the Dow, where there was some rotation from investment managers into the Dow that felt a little bit defensive to me as far as what could happen with interest rates, the tariffs, all that kind of stuff. The concern about importing inflation, and now there's arguments that, oh no, it doesn't import inflation. So the talking heads on the financial networks are battling out along those lines. But if we can break above 450, then we can continue up on the Dow. So that'll be interesting to see. And then we move to the Qs. And at this point, I am going to switch back and look at the bond market because the Qs are widely viewed as being tied to interest rates. I think the IWM, the small caps, are even further tied to it. So let's switch over and look at the bond market, and then we'll come back over here to the Qs. So if we look at TLT, which is the 20-year, remember, this is prices. Prices and yields move inversely if you're newer to the channel. And those of you that have been watching have heard me say that in ad nauseum. But the TLT is a 20-year. It's a good intermediate viewpoint of what's going on with rates. And we had this expanding triangle. We've had a lot of them over the past couple of years. I'm a big triangle guy, and most of the time they're consolidating triangles. But over the last couple of years, I've seen more expanding triangles, I think, in those 2 years than I have in the 27 years prior. But we broke out. So prices moving up means yields and rates go down. So a slight tick down in prices today, which means yields have ticked up, but not significantly. Even though the equities market reacted negatively to the consumer sentiment, the bond market hasn't. And this goes back also to what occurred on tariff tantrum Monday. The bond market didn't really do a whole lot. So you had the VIX not spiking to extreme high levels. You had the bond market being quiet. So those were two good indicators that, as ugly as it looked on Monday morning, this is probably short-lived, and we're going to recover. The interesting thing here is we did break out of this expanding triangle, but then on the move back today, we're right back here. Are we just testing the breakout? That's one of the three ways that securities break out of triangles, is that you have a quick breakout and then you come back and test it and then you continue on. So if prices continue higher, that means yields and rates come down. A lot of you've asked about TNX. I used to show TNX a lot. Again, we try to respect the amount of time that you devote to these recordings, and we love you, the fact that you watch them. We appreciate it very much. So try to keep the number of symbols down, but y'all like the TNX, so I'll go ahead and show that. So now this is yields. So TNX shows yields or rates, where TLT shows bond prices. And again, they move inversely. One thing to note here on the TNX is that we have a bit of a zigzag pattern right here. So notice that that B wave is right in the area here of 43% or so. So it's above the 38.2% fib level, almost to 50%. And that's going to yield 100% extension. Look where we are right now, exactly on TNX, is at the 100% extension on that C wave. So is that the end of rates going down? Are we going to get a reverse in TLT as well? So is the bond market going to start looking? Because the bond market seems to be looking for more rate cuts, even though the Fed is telling us no. Yeah, I think the Fed's very happy with where things are, and they're going to wait and see. And maybe the second half of the year, we had a Fed governor come out and say that she's not comfortable with cutting rates anymore until she sees more effects on inflation and get down closer from 2.8 to the 2% level that they want. So I think the Fed's on hold for a while. And we'll have to wait and see how the bond market reacts. So the fact that we're at this 100% extension means that that could hold, or we could have an extended C wave down to 161.8. It happens often that the C wave extends to the next level, but we'll wait and see how that plays out. So I wanted to throw that in. So now let's go back to the Qs now that we've covered the bond market, and with rates being a little bit on the lower side. You would expect to have a bit of a bid in the Qs, maybe even more than this. The interesting thing here is the software. And by the way, if you haven't gone to hub.com, if you're newer watching, go to hubb.com, get a copy of the software. You get free LA Wave, you get free live LA Wave, so you can have intraday charts that are live. I know in this age of instant gratification, a lot of people are trading shorter term. I'm not condoning being a day trader, but a lot of people are doing it. So you might as well have the best tools to do that if that's your mentality. So go get a copy of the software. So the algorithm is programmed. These aren't my labels. They're programmed. The software programs it from the algorithm as Ralph Nelson Elliott wrote it. And when the wave 4 is green here, the purple means that's a confirmed wave. The green means qualified, but we're not sure. So the software is not sure that 4 is done, that's a little something to be cautious about. But we're above 510. We're above the 10-day moving average. Again, we'll see if we can close there. But the market that has really been in tune with the bond market has been the IWM. And I've gone through dissertations on why small caps are more sensitive to rates. Look at some of the past recordings. I won't go through that again in the essence of time. But the fact that we had this big move down, you can see the wave 4 all the way down to 75%, barely staying qualified on a 5-wave pattern above the 78.6% fib level. We had a big move down as rates moved up. And now that rates have calmed a bit and bounced, the IWM has. So this is moving exactly as you would expect, where the rest of the equities markets seem to be out on their own. They're on an outlier on their own, not so much in lockstep in tune with the bond market the way the IWM is. But you can see this trading range that I've drawn here from 230 to 220 is kind of the bigger range. I drew a line through the middle. That's an area of congestion, I call it. That's when you trade through the area. So back here in fall, that was resistance. And then as we came in here into the beginning of this year, we've traded through that level at 225. And then the 10, 30, and 50-day moving averages are all right there. If we can break above 230 on the IWM, then perhaps we are off and running in a wave 5. But there's too much resistance here. We have to wait and let that break above 230. Then you can go long the small caps if you want to. But for now, with the fact that this has been resistance for a couple of weeks, let's do the Missouri thing. Show me you can break above this. Then we can feel comfortable going long. But until then, I think you're on pause here with the possibility that we could move back down towards that support level at 220. I'm not saying we're going to break it, but if resistance holds here, that's the likely next level. But if we, again, break above it, then we're good to go on the IWM. All right, so let's move into energy, and we'll look at UNG. And I've just been joking about this. I talked about it in our insiders meeting last night. I can't figure this market out at all as far as what's going on with natural gas. We had that huge cold snap where it snowed in Florida, snowed in New Orleans, once in a lifetime they're talking about, and that didn't put a bid under natural gas. We've had this little bit of a move up. We do have a very solid wave 4. It is purple, so the algorithm does think that wave 4 is confirmed and that we are in a wave 5. But it's a little counterintuitive because we're coming out of winter now. The market looks 6 to 9 months ahead, and you get into spring and summer, and you're wondering, normally there's less of a demand for natural gas in those months. So are we going to continue up in this wave 5? I just think this is a little suspect. I want to see this break the wave 3 high. If it does, then we know that we're off and running, and we can actually finally put a comfortable trade or a confident trade on natural gas. But so far, it's been so squirrely the way it's acted. It's been very difficult to trade. So we'll see if this can continue the bid. But it wouldn't shock me to see natural gas come back down and this chart relabel. But for now, it's well constructed. You respect it until it shows you something different. We are above the 10-day moving average. We'll see if natural gas can continue in that move. Moving into oil, this is the one that's also been really, I wasn't spot on because it went higher than I thought. As you know, if you've been listening, I knew we were going to break out of this triangle because, again, I do a lot of stuff on triangles. So the breakout was going to occur. It just broke a little further than I thought. I've been saying for months that I felt like this trading range here is probably where we're going to be in oil. We got a little bit above it, but now we're back down in that trading range. And OPEC actually came out and said the exact words that I've been using, which was my intuition all along, was the drill, baby, drill that President Trump keeps talking about, increase domestic production of oil to bring the cost down. OPEC literally said, go ahead, drill, baby, drill. They actually used the phrase in their commentary. We're just going to cut production to match the increase, and that's what I thought was going to happen. So I feel like oil stays in this trading range, and I'm happy to see it back down here. Feels better at the gas pump. I think until shown differently, that's something to watch. But in the back of our minds, we do have this wave 4 that's awfully close to the 61.8% level. So if oil did want to bounce and try to make another run, I'd hate to see that, both from the effect on the economy and the gas pump, et cetera. This is a good, logical place for it to bounce. And if it doesn't do that, then I do think the trading range is in play. So we still have to keep an eye on that. But I was still lean towards the trading range standpoint there. All right, so let's get into the crypto world. We'll look at Bitcoin. A lot of talk on cryptos, as you know, since election night. And I think that although we've been moving back and forth here, all in all, you'd have to feel pretty good about where Bitcoin is. It's consolidated this big run from election night pretty darn well. And we'll wait and see if President Trump does buy Bitcoin to put in the strategic reserve as he said he was going to. I know a lot of people in the crypto land are waiting for him to say when they're going to do it. Why would they tell us? It makes no sense. Why would the administration tell us when they're going to do it? Because then everybody would rush in and buy, and then the U.S. would be buying at higher prices for the strategic reserve. That makes no sense. So we're not going to get that information, I don't believe. But then it's difficult to short it, because if you try to short it, then they come out and say, how much they bought, and then you get a big move up. And then, of course, it would move up while the acquisition was going on. And then we look at Ethereum, and I'm sure you're all aware, Eric Trump tweeted out that, hey, it's a good time to buy Ethereum. Just buy it and you can thank me later. There's been a lot of speculation about whether that was an appropriate thing to put out with his close ties to the president of the United States, but that's what he said. So far, it's had a muted effect on ETH. He really didn't move the needle with that tweet. We've just been consolidating here. We did have a big, boy, if you were nimble on Sunday night when all hell was breaking loose in the futures and in the crypto market and stepped in, you could have gotten a really good price on Ethereum. But for now, it's just hanging in there. We'll see if if he knows something. We don't know for sure exactly what President Trump's going to buy for the strategic reserve, but there's a lot of speculation that it'll be more than just Bitcoin. Could it be Ethereum? Maybe. And then we go to look at XRP, and boy, XRP has been the hot one, right? This is the hot one with the meme group, and we've been talking about this as well on TradeFinder that we talk about on Tuesday nights. And if you're not familiar with what TradeFinder is, You can sign up for it with the link that you see on your screen now. We do it every Tuesday at 1 p.m. Eastern time, so it's during market hours. We talk the markets, we look for trade ideas, and we have a live Q&A. It's a great community. They chat back and forth. They ask great questions. It's free, and it's during the market, so it's a lot of fun. Love to have you join us. So sign up for TradeFinder if you haven't, and join us on Tuesdays. And if you can't make it during market hours, watch the recording. I think you'll find it's a really good show. And one of the things I had talked about, and this goes back to my old golf pro days, is this is my favorite breakout pattern, where you have a vertical move that goes into a symmetrical triangle. I call it the golf flag pattern because I'm old enough to remember when the flags on the pins on greens were triangles. Now they're all rectangles, but they used to be triangles. And so that's what it always reminded me of. And it is my favorite triangle breakout pattern. When you have a vertical move that goes into a symmetrical triangle, that's going to break out. We can never pick a direction. Triangles can break either direction, whether it's ascending, symmetrical, or descending. Any triangle can break either direction. So I was saying to the TradeFinder group, this is going to move. I don't know which way. And clearly the move was to the downside. So we'll see how things play out with XRP. But there's pros and cons to what's going on with XRP. Apparently, President Trump met with the guy that started it. And so that put a little bit of interest in it. Would President Trump actually include XRP in the crypto purchases of for the strategic reserve? Or, as you all ask about, we'll move over to SOL here, Solana, which has been a good one. And as I mentioned, you guys asked to show this, so we substituted this for Cardano so that you can see this. And just as a reminder, each and every month this year, we're giving away one of our free subscriptions, our level 3 subscriptions, where we do the time strategy. That's a sideways based strategy. It's income based, where we do calendars and butterflies, things like that. It's not directionally based, so it's sideways. You just benefit from an IV drop and time decay. And then we have the volatility strategy, which is all those triangles that I've been talking about. So we look for triangle breakouts. We don't pick a direction there. But then we have the AI impulse strategy, which focuses heavily on doing zigzags within the wave 3. Wave 3 is the strongest of all waves. Zigzags within a wave 3, to me, is my absolute favorite directional pattern, bar none. And now it's AI-ified through the Hub Group's data scientists, and you get all three of them. It's worth thousands of dollars we call it level 3. We have all three portfolios, and we're giving away one free each and every month this year. And all you have to do to register is leave a comment under this video, and then you're registered. And so good luck to you. But y'all ask about Solana, and it has come back down. Now we have a huge area of support here at 175, so we'll keep an eye on that, see if we can hold that area. None of the cryptos are performing as well in general as Bitcoin. There's outlying altcoins that are moving, but that's not what this is about. In fact, if you're interested in crypto, we do have a crypto show over on the Hub Financial channel. So you go to Hub Financial, and we have a show devoted just to cryptos. We're talking about all things crypto. So go take a look at that. Subscribe to that channel if you haven't already. So this is the LA Wave Options channel, but that's over on Hub Financial with the cryptos. But the key here is holding 175. That's what you want to know with Solana. And until we find out if we can hold that or not, you have to be a little cautious here. The wave 4 right around the 61.8% level. So if we can hold this 175 and bounce, then we're all good to go. Maybe we move into the wave 5, but we're too close to be confident that the wave 5 is underway. We need to watch this 175 level and see if we can hold there. Other stocks that you all ask about, Tesla, shocking there. But look at this pattern. We had the big run up post-election with all feel-good stuff between Elon and President Trump. But now we have this big descending triangle pattern. And we're trying to sneak out to the downside here. Not too definitive, but we've broken the 50-day moving average. We've had a bearish 1030 cross. This looks precariously close to a significant breakdown out of this triangle. We don't know that. Again, we don't pick directions. I'm just saying that if it broke to the downside, it could be a rather rapid move lower. We could come all the way down here into this area, extend this down to the 250 level, because when we moved up from 250, it was pretty vertical. So that means there's no resistance on the way down. But again, I'm not saying we're going to break to the downside. I'm just saying if we break to the downside, it could be a quick move. But as I mentioned earlier, any triangle can break either direction. So even though it's a descending triangle and we've consolidated this big move into the triangle post-election, Tesla could still break out to the upside. Now, this is a pretty expensive triangle, even the way we do them. We do them for the best delta gamma relationship. So we don't do strangles the way they're traditionally done. We set them up so they mathematically can perform the best possible through delta and gamma of the Greeks. But it's still, even that, which is out of the money options, would be pretty expensive. So maybe you keep an eye on this. Tesla's going to break out, and when it makes the break, trade it directionally, unless you have a large account. But if you do have a large account, putting a strangle on Tesla right now, I think makes a lot of sense. We look at the ADX down here, and you can see it got very low. I like it when the ADX comes down to around 15 or so for triangle breakouts, and we're starting to tick up from that area. So it does look like Tesla's going to make a pretty significant move here in the not too distant future. CELH, just about as ugly of a chart as you could ask for. Last time we looked at it, we wanted it to hold this 25 level, which was the 161.8% fib extension. It didn't. I've only can remember probably on both hands. So not a whole lot of times that we have moved down to a 261.8% extension on anything in the markets. But this has a chance to do that. Breaking below 25 was huge. So this is the old phrase, you don't want to try to catch a falling knife. That's what you're doing. If you're trying to pick a spot to go long CELH, good luck. It's just, I don't see anything that shows where this would be possible to move to the upside. The only thing you can hang your hat on is that we have a little bit of divergence here on the CCI, which is our short-term indicator we look at. I like the DMI to confirm Elliott wave, but the CCI is more responsive to day-to-day movements. So you can see slight divergence there. In other words, the price is still moving lower, but we didn't make a new low on the CCI. That's the best I can come up with for anything bullish to say about this. So I think be cautious here. The wave 3 will end at some point in time, but breaking 25 was definitely a concern level. Flashing warning, Will Robinson there. And then Nvidia, we wanted to see where that was. You guys asked about that as well. And that actually showed up in our AI search. This is for the time strategy where we look for stocks that have dropped and moved. The score was too low. You can see its grade to do a sideways trade. So when the score is too low for a sideways trade, it makes you think you're going to move to one of the two boundaries, where the idea of the time strategy is you stay within the boundaries. So when you have a score that's too low, the data scientists tell us that means you're likely to hit one of the boundaries. So you flip it and you can trade it the other way, which is a great thing about these signals. You can do that with the directional ones as well. The high scores, you trade in that direction, and you can fade the low scores. So lots of potential trading opportunities. So we are working on a doji here. Again, we aren't at the market close yet, so we'll see if we close there on Friday. But we seem to be trending up towards that upper boundary. I think that's the likely spot for where Nvidia is going to go, and then we'll find out if this wave 4 holds. It did hold above the 78.6% fib level, but gosh, to be bullish and feel comfortable about it on Nvidia again, I would want to see it break above 140. We got all this congestion here through 140 again, where it's traded through it. That's going to act as massive resistance. So to go long right now, if you wanted a short, quick trade, perhaps. But if you're looking for a good entry to try to make a longer run on Nvidia, let it get above 140. I usually try to give both an aggressive and conservative stance, because we all have different risk tolerances. You know what yours are. If you're aggressive minded, perhaps you can make a short-term trade here. But just know that you're going to have resistance at 140 if it gets that high. the upper boundaries at 132, which is only $3 away. But if you're more conservative, like I'm happy to wait, let it get above 140, then you can feel more comfortable. And then, of course, Palantir. We can't go anything without doing Palantir. And I'll change the chart here because it moved exchanges. Good old Palantir did. And, great earnings report. And then we're getting follow through today. So we had the big bounce up that was on the earnings. Again, a stellar earnings report and very quick consolidation. I thought we might trade sideways here a little bit longer following this big gap up. I don't like gap ups. I don't like vertical moves. So I'm pretty cautious about getting too excited about Palantir right here. I was kind of hoping that we would consolidate this move a little bit, let the 10-day moving average catch up. You know the rule, no security in any time frame gets too far from that 10-day moving average. So when you gap up and you go vertical and you get too far from the 10-day moving average, that's bam, 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 three things that are concerning for me. I don't want to chase this move. Basically is what I'm trying to say. But I felt that way yesterday too. And then you had a big move up today. So take it for what it is. But we are getting extended on this short-term move in Palantir. I think it needs to do some backing and filling. Perhaps it's going to be a good place to be on a longer term. But from the short term, I would have a real hard time chasing that at this moment. And then Intel. We're going old school. I'll ask about this one as well. Happy to show you the chart of Intel, an extremely well-formed wave 5. It does seem like there's going to have to be either a split up of Intel or a buyout. And then there's been talks with Broadcom, et cetera, on buying Intel. That's the difficulty on, even though this is a really well-formed 5-wave pattern to the downside, you have to keep in the back of your mind that with all these talks of, spinning off the manufacturing, which could create some value for Intel, or some sort of a buyout, obviously that would create a massive spike to the upside if either of those two news events came out. So pretty difficult at this point in time, even though the pattern looks so good to the downside on Intel. You've got those potential things out there which make it challenging. We are at a point of resistance. Support here, right in this $19 range. And normally I would say if we break below this, we are good to go. We're coming down to this tap box around 15, and I would feel really comfortable about that. Again, it's a really well-formed Elliott wave pattern, but that news is out there. Are they actively looking for a buyer or to split up? We don't know. But you just have to know that that's the risk. If you short this stock, that's the risk that exists out there. So as always, thank you so much for your attention. Appreciate your time very much. Have a great weekend. If you know anyone that could benefit from these, if you like these videos, please ask them to subscribe. We're on a push to get to 50,000 subscribers. That's a big round number. I'd like to see us get there. I think old Chuck would be happy if we could get there. So see if you can't help us in that. But make sure to leave a comment so you're registered for the giveaway. Have a wonderful weekend. Look forward to talking again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.